Welcome you back to my channel. And in this video, this will be part 2 to our institutional trading series, when we're also still talking about Wyckoff. In this particular video, we're going to focus on the accumulation schematic. So when speaking of accumulation, there's two schematics. One schematic, it has a spring. And so we talked about the spring in the last video, where the spring is what the composite man or the bank uses to, take liquidity from the market, stop out retail traders and things like that. It's pretty much the fake out before price actually goes in its intended direction. Now, one of the things I want you guys to understand about these different schematics is they might not look exactly the same as this particular schematic here. It'll have these components, but all these little intricate moves within this schematic, you might not see it. In some areas, for example, and we'll get to all of these abbreviations in a little bit, but in some of these examples, as you notice that this price here has impulsed it past the AR, that might not happen. So when you think about these different schematics, think about almost like, for example, McDonald's and Burger King. You know that McDonald's has a Big Mac. You know that Burger King has a Whopper. These two burgers do not look alike, but they're still hamburgers. They're still burgers. So that's how you can kind of think about these different schematics. They might not look exactly alike, but the moves that you will see within these schematics are still the same. Okay. Now, when we're looking at these different schematics within the accumulation schematic, you have these things that these different symbols that kind of identify the different parts and phases within the schematic. So for example, when you see price breakdown and you start to see maybe equal lows or something like that, or price is stopping within the same area, and you see from the initial stop, which is the selling climax, that price impulsed it up, from here is when you can actually start thinking or visualizing your accumulation schematic. Okay, so like we said, with accumulation, it builds on the bottom. That's when price is oversold, and from there, that's when demand exceeds supply and it builds, and then price shoots up. So when it's on the top, that's where you have your distribution. That's when supply exceeds demand, and that's when price shoots down. So in this instance, like I said, price will build, give a fake out, and then shoot up. So one of the things I want you guys to understand, when you get your selling climax, you can start to draw what is called a support line. And then once you get an automatic rally, you can draw your resistance lines. Now, in between these two areas, these are your trading range. So you could trade within this particular range from top to bottom, and you can utilize that as a point of reference for your take profits. Okay. So now let's look at these different abbreviations. So like I said, the very first thing that stops down here would be your selling climax, which is your SC. Okay. Then from there, you get a push up to an automatic rally. It'll drop down to a ST, which is a secondary test. Now you get a ST in phase A, and you also get one in B as well. That's why this one is called a ST in B, pretty much the secondary test in B. From here, price will play around a little bit, and in some instances, price actually might push up a little higher than this area here. In some schematics, the impulse higher than an AR is considered as a UT, which is an up thrust. So you might have some of those as well. But what it'll do, it'll break down to the spring, and from here, the spring will impulse up to a test, which is it might test the support lines, or it might test a little bit up under the support lines. Now this is an area, this is the prime area in which you will actually take your buy, which is actually off the test. Now, one thing I want you guys to understand about the spring never happens just haphazardly and come down there and just bounce randomly. The spring always needs something to bounce off of, whether it's an order block or whether it's an imbalance, but it needs some sort of POI or some sort of level of demand or something to actually bounce off of. And we'll show you an example of this on the chart. Okay. So after your test, then you get what is called an LPS, which is a last point of support. And from here, it breaks past the resistance lines and give you a backup last point of support. And then from there, you get your SOS, which is your sign of strength. From there, it kind of runs and do what it does. Okay. All right. Now let's look at a schematic 2. So the only difference between the two is in schematic 2, there is no spring. So you can see that you have some of the same moves. You got your preliminary support, your selling climax, automatic rally, ST, STMB, and then they move along. But in this instance, you don't get the spring. Okay, so the composite man doesn't manipulate this particular schematic that much, but it still kind of follow the same principles and all of that kind of thing. And you can still trade within the support and resistance lines. This is still considered as your trading range. Okay, now let's hop on the charts and kind of look at some examples. All right, you guys, so we're here on gold and we're on the 15-minute. And as you can see, within the schematic, it has some of the same parameters and things like that. Now, the biggest difference in the schematics that we saw, we noticed that when we got a ST, that ST impulsed past the AR and it retested and then it broke down. And this is what I mean when I was saying that each schematic might not look exactly the same, but it'll still have those same components within it. As you can see, we have the PS, the SC, AR, ST, things like that. We got the STNB, and then it impulsed down to a spring, and we got our test. Now, remember what I said, the spring needs something to bounce off of in order for it to actually tap something and go into its intended direction. So let's say if we took a line here, or a horizontal ray, and we placed it here. And then we started to scale over this way just to kind of look at price and kind of see what, you know, caused this particular area to bounce off of. If you notice in this area, first thing we saw was a imbalance. We have an imbalance right here in this area, but price still, you can tell it came past this area. So let's break it down to the 5-minute and see what we have. You know what? Let's go back to the 15-minute and let's do a bar replay. That way we can kind of move price a little bit. Let's see right here. We'll go ahead and do a bar replay right there. Okay. Now let's drop it down to the 5-minute. And as you can see on this 5-minute time frame, what do we have? We have an order block right here. We have an order block right here in this area. Okay. Which gave us a level of demand. Now let's break it down to another time frame and see if we see something a little bit more closer. Drop down to the 3-minute. Now, here's what we're looking for right here. If you notice this order block right here, look what price did. It bounced off this area perfectly. Now, why is this area more important than the other areas and things like that? The reason being is because this order block, it broke the last high. As you can see, we were down here. You made a higher high. You made a high, a low, higher high, higher low. And then this order block here created the move that impulsed past this high here. So when you have moves like that, and as you can see, price rapidly came from this area, creating inefficiencies within the market. So when it happens, price has to come back and it has to test this level of demand so it can close out these orders. It has to close these imbalances. But this is a very high level of demand because, like I said, it broke the last high. Okay, so now let's go back over there to price. Let's stop the bar replay. And let's go back over there to price and kind of look at this. And this is actually a trade that I actually took. So let's kind of break this thing down. Let's go to the 15-minute. If you guys look at this, no, I'm sorry. Let's go back to the 1-minute. So if you guys look at this, let's just say you got your spring here. Price came up and it broke down within this test area. So basically what I did with this particular trade is when price came down, I can see that it gave a little bit of liquidity and things like that. So when it gave me these highs here, I trapped price in the box. Now there was one or two things that you could have done within this area. When price started to break down and it gave you a bullish engulfing, this could have been your entry here. Right after this candle here, you could have put your stop loss under this area here. And what you could have done you literally could have rolled price all the way up to this area here. Or if you didn't catch that area, that entry, you could have waited for price to break the box, give a retest, and then once price actually broke this area and closed here, you could have took your trade there, stop loss under this liquidity price action here, or you could have put it, you know, possibly under this candle here, and you still could have rolled price up to the resistance lines. Now, when you're doing this, let's actually look at this. Let's see how many pips that is. This literally from this area is 229 pips that you could have caught just riding this up, you know, within your trading range. And so one of the things that you could have done, you know, with this, you could have set different parameters to take partial profits. But another thing you could have done is when price came up and it gave you a LPS, your last point of support, you literally could have placed the stop loss here under this area here. After it gave you this, price shot up, came back to give you your backup last point of support, stop loss could have went here. Now in instances like this is when an unexpected trade can turn out to be something. It can turn out to be an amazing opportunity where price can constantly run and run and run and run, and you didn't expect that, but those are some of the opportunities that you can catch when you're actually trading this Wyckoff schematic or Wyckoff in general. You know what I'm saying? So as you can see, it's broken the resistance lines, gave us a sign of strength, and then price is probably going to shoot up a little bit more, or it might start consolidating again, give us a distribution, and it might shoot down. Now, also within this accumulation schematic, there are other opportunities we possibly can look at. For example, you see in this particular area, we see we was in a downtrend. Price actually gave us a break of structure, came back to retest. But as you can see, when price came up, it did not necessarily break this area here. But what did it do? It gave us a couple things that we can look at. In this area, we have a supply zone right here. You have a bearish, bullish, bearish order block. Let's go ahead and mark that supply zone right here. We got a supply zone. What did price do? Price came up to this area, tapped the supply zone, and then it dipped off in this area again. Now it also gave you another test. Gave you another test, which you could have done. Let me go ahead and do a bar replay here. One of the things you could have done, drop to the 1 minute. When price broke this area, gave you a small retest, you could have taken a sell right in this area here. You could have put price either here or above this price action here, whichever way you look at it. Ride price all the way down to the support lines. What is that? 142 pips. You know, you can catch trades. Like I said, this is your trading range. When price is at the top, you can ride it down to the support lines. When it's at the bottom, you can ride it up to the resistance lines. And so that's, like I said, that's the power of understanding these, the Wyckoff schematics and how to trade them. Hey, you guys, in part 3, we'll talk about the distribution schematics and things like that. But in this particular video, I hope it was informative for you. I hope it blessed somebody. And I'll see you guys on the next video. All right.